Hi, and welcome to the Market Alert for Monday, 31st of October 2022. So Friday, stocks rocket into month end while real yields tumble. Shocking Amazon earnings, final little changed, but 1 year inflation expectations revised slightly lower. Stubbornly high US ECI PCE data, dovish Bank of Japan, hot European data, hawkish ECB rhetoric, and Apple beat on EPS and revenue, but miss on iPhone sales. So all bad news, and the market moves higher. Just let that sink in. Have global central bank hawkishness and inflation both peaked? Well, that's what drove the markets during Friday, that the Fed are about to pivot, etc. Bonds should find it easier to rally than sell off in this environment, while stocks will be stuck in a bear market until we see a clear upturn in excess liquidity. Well, at the moment, we're not seeing that at all. And this when we were just referring to the Bank of Japan in the first news item, unveils 200 billion fiscal stimulus to fight inflation. Will do more QE to fight adverse effects of QE. Yeah, well, work that one out. It's questionable how long it can tolerate a situation where the government is carrying out interventions to stem the yen's fall while the Bank of Japan's monetary policy is facing a completely different direction. It's just like watching the ship sink, isn't it? You know, they're just throwing everything at it, including the kitchen sink, to try and keep everything afloat. And also, going back to the stock market, of course, it's going to stay like this until the 8th of November, isn't it, when the midterm elections, and then the market might change direction. But at the moment, there's nothing to stop it from going to the upside. It's just bonkers, despite how bad the news is. But there you go. Speaking of news, let's have a look for this week. Today we've got a European CPI flash estimate. That's out at 10 a.m. While I'm thinking about it as well, the Dow is going to come on stream at 1:30 for this next week as well, as we've gone back with the clocks. They're remaining on daylight savings, but change this next weekend. And the main things for this week, we've got Jolt's ISM manufacturing on Tuesday, but then we get into the big stuff this week. We've got ADP, and then we've got FOMC this week as well, and looking at 0.75% increase, 75 basis points on Wednesday evening from the Fed. ECB on Thursday, Bank of England monetary policy as well, rate rise coming of 75 basis points as well for the UK as well. I don't know why they're doing 75 when they could just do 1% each time. It's just bizarre why they're picking that number. What else have we got? Friday, ECB again. Non-farm payrolls as well this week, 200 opposed to 263. But we'll look at these in more detail as we move through the week. But yeah, it's going to be a lot more news-driven this week. And we could see a few days where we get a bit of a pullback, or again, this news will be enough to continue to move prices to the upside. Gold-silver ratio moving back to the upside. That's because the dollar is starting to move up in anticipation of the 75 basis points this week. Right, let's have a look at the markets. Kick off with the Dow, see what happened during Friday's session. So Friday, unless you've been living under a rock, the market moved over 1,000 points on Friday, driving straight up. This now puts us in a situation from this last move. We're currently to Friday's high, up 4,341 points from the 13th of October. That's where this bar here at the bottom where we measured from. So up a staggering 4,341 points there in the Dow. And Friday alone in the 30-minute chart, I'll come back to the daily in just a second. Again, you will see, if we just draw in the move to Friday's high, we have 1,015 points in this move. Never stopped, never came below the 5 bar, never closed below the 5 bar moving average, traded below on the odd bar, but just kept going. From the start of the trading session when the cash market opened, it was just straight up. Overnight prices are sideways. There's the high to get through today if the market is going to continue in the daily chart. The only problem is in the daily chart, this is the next sort of swing point. If I just draw from there down to the low, you will see that the market traded up to 89 on Friday at 32,926, so nearly 33,000 from the low down here of 28,000. So a massive move in the Dow there, straight through the 89 on Friday that we looked at, where we had some potential weakness. And the market's not gone up on any great or significant volume. But if it does move lower, you're going to have to watch that 200 MA, because it could become support, or it could do like it did last time where it broke through. We can see to the left there you had that rally up. Just move this over. We had another big move here. In fact, what would be interesting to see is how big this move was to here. That was also 4,000. Now that's interesting, isn't it? 4,156. And in this move, what did we say it was? 4,341. So interesting, and you've gone just through the 200 there, as we've just gone through the 200 there as well. So that's very interesting as far as patterns are concerned. In the German DAX, we traded up to the 89 during Friday. Well, just shy of it actually, but in that area, 13,337. The high of Friday was there, 13,353, as can be seen. Actually, Friday's high is, oh yeah, okay, so we traded, oh, sorry, it's here, isn't it? A bit earlier, 13,261. So yeah, there's the high of Friday. Let me just go back to the daily charts. Here we go. So yeah, up to the 89 there, and again still above the 5-bar moving average. The total move now from the same time of October the 13th to Friday's high in the DAX is 1,267 points. So again, about 9.5% move in the markets to this point. In the 30-minute charts during Friday, let's just have a quick look at this from low to high. Particular when the Dow moved high, we got 304 points. That seems to be the average move these days. But from when the Dow kicked off, we moved up a 200 and odd points, was it? Yeah, 250 points, more or less. So a big move on Friday afternoon for the German DAX. The high, the market's struggling with the close as well at the moment, and it's going to find support at the DP and the 50 EMA, and could bounce off that and have another look at the high. Just depends on the economic news, whether that's going to be factored in. Will Powell go for 75 points, or will he go for a full 100 basis points? We'll just have to wait and see, but it'll be interesting to see how the market unfolds over the next few days with this. But just going back to the daily one more time, there you can see we're at 89, so watch this level. If the market does go through Friday's high, there will be some sort of resistance at that 13,377 level. In the 5-minute charts for Friday, you can see it was quite a boring day actually, until the U.S. session and the news came out, and then the markets moving to the upside. Support at the close, and also the DP, the 200 MA, the 5-bar, everything was there, and the market then moved up at that 248 points to the close. Overnight, I think we had a bit of a gap down, didn't we, in the market? We did. We filled the gap. There's your gap there. We've rallied back to the gap, which is the close of Friday, and the markets have moved lower. But now they're just stuck in a sideways range. As you can see, they're trading slightly lower. But there's nothing to stop the markets from moving back up to Friday's high if they so wished. It's going to be down to whether the move on Friday was a genuine move to the upside, or there was just, again, it was half term for the majority of people, particularly bankers in London, whether they've just seized the opportunity and sent the market to the upside. Again, we'll have to wait and see during trade when it kicks off. But again, keep an eye on all of these downside targets as well and levels, and you can draw these in as well. This is from here, which is the major move of Friday. back, and again you can see there you've got 38 and 50 tying in with the DP and the 50 EMA as well. So very important area. If the market is going to break here, it's going to have to drive through there with some force. It's closer to the high at the moment than it is to the low, so still bullish at this point. Trades for the week. I was busy last week, as you know, 411.92, so took advantage of Friday's trading. 70 to 30 and 5.36 for the profit factor there. S&P also up on Friday through the 89. Let's have a look at the next upside on this one, which is going to take us to here. So let's just draw in the fib retracements to there, and you can see that we're at 50.62. Also got some resistance here. Actually, I'm just going to redraw this, see if it's this one actually is what we want, isn't it? Yeah, so 62% retracement there. Up at the 200 MA we've got the 89 and 78 to get through as well if we continue to move to the upside. On the downside we've got the 50 EMA and the 5 bar also offering some sort of support there as well. In the 30 minutes, again, you can see the massive move up in the S&P, and in the FTSE 100, the move isn't as big at all, trading up to the 50 EMA there. Depending on whether the honeymoon period's already for Rishi, we'll have to wait and see. But at the moment, it's not followed like the Dow did. And if you look at the 30-minute chart, you see quite a bit of a non-event compared to the rest. At the moment, the market finding support at the DP overnight. If this is broken, you've got the 200 MA, the S1 and Friday's low with the BRN there of 7,000, a very important level, as you can see there, in waiting should the market move lower. And finally in the metals, down for the precious metals on Friday as the dollar starts to move higher. To show you this, there's the move on Friday for the US dollar. If we look at the 30-minute chart, it was choppy, but moving to the upside, and it's still moving to the upside on the overnight as well. So having a bit of an impact on the metals prices. Silver daily down below the averages there, so weakness coming in. There you can see the news, and then the market finding resistance at the close and moving lower at the moment as well. Gold the same, down on Friday as prices came under pressure, and from there to there you want to watch the 1623 level should prices continue lower, which they're likely to do this week as soon as rates are raised on Wednesday evening. 30-minute chart of gold, you can see the impact of the news on Friday, and also how the markets become sideways. You need to watch the low there, but again it's all dependent on the dollar moving back to the upside, which is traded back to that 78.89 that I've just removed, and these are the upside targets for the dollar index should prices continue to move to the upside, back through the 50, back through the 5 bar moving average there, and resistance areas in the fibs there. Okay, that's it for this one. Let's see what the market does today, and whether there's going to be a pullback in this market or not, and if we do, how significant it will be. That's it for this one. As ever, thanks for watching. See you in the next one.